Dan Celia.
Our poverty level has done nothing but go up.
I really, really appreciate your show and everything that you're doing. May God bless you.
Your personal economy.
You can't say, I don't want any risk. I don't want to take any risk. I just want to put my money in a CD and forget about it. But I want to earn 18% a year. It doesn't work that way.
Conservative talk radio you can count on.
Once again, Steve Forbes. Hey, Steve, how are you?
Dan, good to be with you.
Financial Issues with Dan Celia.
Hi, Dan. I just want you to know how much I really appreciate the passion that you have.
Aligning reality with truth.
And I've got Congresswoman Bachmann with us right now.
So I just want to thank you. I want to thank your listeners.
We need to save America and keep it intact for our children and grandchildren.
Now, here's your host, Dan Celia.
Welcome back, Financial Issues. I'm Dan Celia. It's great to be here. Welcome to all of our viewers at NRB TV and the other stations, the radio stations that pick us up for the second hour. Sure appreciate it. We are, it's Friday, so we're doing rapid fire. We go right to the phones. And look, if you're just tuning in, if you're a new viewer, a new listener, the goal here is that we move as quickly as we can through the calls. We're going to continue to do that. I will just say, obviously, yesterday, we saw a unusual market, right? We had the Dow. If you want to take a look at the Dow, if you're watching this on TV, take a look at what we saw yesterday. We saw a dramatic spike in the Dow yesterday, and obviously that, everybody feeling pretty good. And then what happens is, but one of the things that happened that I think I've got to call to everybody's attention is we had a volatility index that was basically off the charts. So we had an enormous amount of volatility with that. And if you if you can't see the chart, basically what you're looking at is a 400-point move in the Dow. That's a huge move on the Dow. And right now, before at the end of the first hour, everything was negative. Right now, and everything opened positive. Right now, the Dow's up again, 36. So here we go again with an enormous amount of volatility. Well, that bothers me. I don't know about anybody else, but it sure bothers me. And nobody seems to be too concerned about the volatility when they blame the volatility in 2008 for some of the really scary performance back in 2008. So, look, volatility is significant. And now, we were seeing volatility on the sell side. Now we're seeing volatility on the buy side. And, it's probably going to trade back and forth for quite some time. Anyway, that's where we are. And right now, all the indices in positive territory. But, again, they could swing at any moment as they did already once today. So we'll watch that. Commodities, we're seeing oil prices in positive territory as well. Oil back up over 60 right now at 60.79. And we're the Brent crude oil and West Texas oil right now moving upward as well in positive territory, and that's at 55.70. So gold is negative, down 2.5. It is at 11.95. Silver is flat, not doing anything, 15.94. The agricultural commodities, we're seeing corn down 1.3%. My word, when's that going to stop? But anyway, corn just all over the place. The volatility in the corn and wheat. Wheat is down almost 3%. That's a huge move on wheat, almost down 3%. Live cattle up about 1.2%. So, again, we continue to see extreme volatility, in my opinion, in the commodities all over the place without any kind of real events happening, either climate-wise or geopolitical events that are still impacting commodities. They still haven't settled down yet. 866-300-9298. Let me go to Jeff. Jeff calling us from Oklahoma. Hi, Jeff.
Good morning.
Good morning.
Got a dilemma here. I'm with the Board of Trustees on a small town here in Oklahoma, and we were looking at offering our city employees, some type of a 401k for their retirement, and I'm looking for some guidance on that.
Jeff, I think that's great. You guys are thinking about doing that. I hope you can. I have an opportunity to say something to you since you're just starting that's going to scare every human resource person right now listening to this program and any kind of city managers that are listening to this program. I believe that, and I don't talk about this a lot because I don't want to encourage anybody, but at the same time, it's the facts, that one of the biggest mistakes that city governments, local governments, counties, states, even the federal government, and private institutions, private companies make is when they offer a 401k to their employees, they don't give them the proper options. In the next 10 years, one of the biggest lawsuits in this country is going to be retired employees suing their companies. The reason that's so is because, and it's already started, you're going to have people, and I know in New York City and Philadelphia, 2 law firms that are already preparing for this onslaught, excuse me, that are saying, I would have done so much better had they offered me this. Or if I had had an opportunity to go on the sidelines in a money market account, surely I would have. Now, we know that's probably not true, but it doesn't matter. They would have said, surely I would have, and I would have preserved 40% more of my money, according to the calculations. And there's going to be so much of that. And these businesses, ministries, state and local governments that don't do that are foolish. Like you can't even believe. And I've had this discussion with so many large ministries. Look, so the first piece of advice I would tell you is I would look at an organization that can design, let me just throw one out there, TIAA-CREF, one of the largest retirement institutions in the country. They do mostly in the educational field and work with nonprofits and local governments. But they will design something. So you can design, you can have a money market account. You can have a stable value fund that's a guaranteed interest account. You can have something very aggressive and everything in between. So you are able to provide. It's far better to not say, well, I don't want to confuse everybody and have 15 or 20 options. No, you need to have 15 or 20 options, not to confuse everybody, but so that can never come back to haunt you guys. That it's always going to be, look, we're not investment advisors. We've never held ourselves up at that, as that we have somebody that comes in and talks to our employees. You've got to talk to them. But we offered, what you needed in any given circumstance. And, whether you take advantage of that is another story. So I would say that you look at a broker, that you don't use insurance companies so that you're not getting tying everybody into annuities or, again, limited options, that you use a brokerage firm like a Fidelity, like a Vanguard, or like a TIAA-CREF that can give you a wide range of options. There are some 401k plans out there that employees, I've had people call on the program and said, yeah, we can put any stock we want in our 401k. Now, there's not a lot of those out there, but that's awesome that they have that opportunity. So I would just suggest to you, and I don't know how you feel about this or how your partners there on the board would feel about this, but the other thing is, why not give options for biblically responsible? You're in Oklahoma. It's the most conservative state in the country. I know that there's people that work there in the city government that are good, solid Christians and would love to have the opportunity to get into a Timothy fund. Here's the thing that I would say to you, Jeff, and no matter what anybody says to you, it doesn't cost you guys a nickel to add whatever you want to add. And you may get You might have someone trying to talk you out of it because they are not benefiting from it. But it's not going to cost you anything, and it's going to be good for those employees. So, offer, a little bit of enough sectors and enough situations that are going to satisfy every condition. So that's the best piece of advice I can give you. I would stick with, those brokers that are able to do that for you. And I think if you do that, you're going to come out with a really good plan that is going to help. There's no reason why you can't say to a Fidelity, hey, I want you to include in our menu, it's called the menu of options that we offer, I want you to include 12 mutual funds from Timothy. They'll do that. They'll gladly do that. It doesn't matter. Now, once you get set up, it's a little bit harder to add, but it's still, even once you're set up, it doesn't cost you anything. So I would just caution you that you deal with firms like that.
That helps a lot.
Good. I'm glad, and I'm really glad you called about that, Jeff. That's great stuff, and it's important. So it's great that you're thinking ahead for those employees. You're going to start this, and you're going to start it off on the right foot, and I really appreciate that, and appreciate your heart and wanting to do that. Thank you. Let me go to Suzanne from North Carolina. Hi, Suzanne.
Hi, Dan. Recently, I heard one of your callers mention Zion Oil and Gas.
Yes.
And I ordered the packet of information, and I've read it. I've called and asked them some questions, but I need some clarification.
Okay.
Okay, they're offering this thing by the end of the year where you get these units.
Mm-hmm.
I'm not sure that I totally understand how this works.
Okay. So the units will, guarantee you certain prices. Do you see that in there? I mean, I haven't seen the offer. I know that there's an offer out there, but I haven't seen it. But so if you were to buy Zion Oil stock today, it would cost you somewhere around $1.45. I don't know exactly what it is, but somewhere around $1.45. But if you do it by way of these units, either over a period of time or now, it may be a little less than that. You might be able to save, or there may be a guarantee that it's not going to, or not that the stock's not going to go up, but that you can lock in prices for a period of time. And let's say you could lock in a price, so it's roughly $1.45 now, and let's just say you could lock in a price at you're not going to pay higher than $3.20 a share, and you're within that time frame, and it's at $4.50 a share. You could exercise some of that and buy it at $3.20. So it works like that. My opinion has always been, with not Zion but any company, is if you want to buy the company, I think you ought to buy the stock at market value and what it's paying and be done with it. So that's just my opinion, but and not get too caught up in all the confusion and all the idea. Well, you can commit more money to buying more stocks at certain prices. I just say if you want to commit some money to it, and that money you're committing is whatever it is to that stock, and then I think you ought to just buy the stock and just use. You can buy stock directly from Zion. They have a stock purchase plan. You can buy it directly from them, and I would just buy the stock at the current price and be done with it if that's what you want to do.
Okay. Well, it says each $2.50 unit is comprised of one share of common stock plus one warrant. Mm-hmm. So you still think just buying the stock outright would be better than getting the warrant and the stock? I mean, that's just my thing is just to say, the tracking and all of that, whatever all of that cost you and you're ready to spend, I would buy the common share and be done with it for that much, for that money. Okay.
Yep.
Now, they said something about inside and outside when you go to, they said they'll never pay any dividends. Mm-hmm. That you take the stock, that you would take it and go to a broker if you wanted to sell it in the future?
Yes.
Okay. But they're offering this directly to you so you don't have to go through a broker. So if you go to a broker, is that going to cost a lot of money, or how does that work?
It's going to cost you $8.95 to buy 500 shares or whatever you want to buy, or 1,000 shares or 10 shares. It's going to cost you $8.95. So It's not going to be, that you're basically, if you buy that through a broker, it's going to be one trading fee. I got to run, Valerie, right up against the break here. We'll be right back, folks. Hi, this is Dan Celia from Financial Issues. So many people want to make plans for their giving. Maybe you've received an inheritance. Maybe you have sold an appreciated asset. You need a charitable deduction, but you're not so sure of the charities and the ministries that you want to see get the money. One of the things you can do is establish a donor-advised fund through the AFA Foundation. The Donor Advised Fund will allow you to get a 100% charitable deduction for the monies that you put into your family's Donor Advised Fund. The AFA Foundation can talk to you about that, help you establish your Donor Advised Fund. Call them today at 800-326-4543. That's 800-326-4543, extension 345.
Christmas, give me more of Christ.
Welcome back, Financial Issues. I'm Dan Celia. It's great to be here. We're going to get right back to the calls, 866-300-9298. Let me go to Valerie. Valerie's calling us from Texas. Hi, Valerie.
Hi, Dan. Good morning, and thank you for your service, and sorry to hear about your mother-in-law.
Oh, thank you for that.
I know you don't have your Saturday shows. I'm off work today, so I got to call in. I'm excited.
Good.
A few years ago, when I had called in, about a year and a half ago, you had said to diversify. I had a 401k, and you said if they had a money market, to try to put part of it in there, which I have, and I know it's been low paying. It hasn't made much, but the other half picked up a couple of $100 here and there.
Right.
So what I'm in is a short-term fixed income and a balanced asset allocation for the 2015 through principal. And my question is, should I leave that? They've got 6 choices. Should I go to a 2020 as a short-term fixed income, balanced asset allocation, large U.S. equity, small mid-U.S. equity, and an international equity?
Yes. I would go to the 2020. For that percentage. Now, obviously, I mean, so what's happening now, right now as we speak, this week, 2020 that 2020 fund has bumped up. So you're getting in. How much time do you have, Valerie? Like, how long are you going to continue to contribute?
So I probably will have to work for another 5 years.
Yeah. So I mean, it's going to be a little bit higher right now than I would like, but it's okay, because you're continuing to contribute to it, and you will for a while. So I would say, yeah, I would be okay with going to the 2020 right now.
And then leave it in the short term in the balanced asset allocation?
I would, because what I would like for you to think about and try to keep on your watch list is if something happens dramatic in the market, and let's just say we have a pretty significant downturn, and it seems like it's a sustainable downturn. It's going to be there for a while, and it's, again, pretty significant. I would probably want to see you take half of that short term. I would like to see you take half of that and put it over into the 2020. Because that 2020 is going to tank. You'll be able to buy in really inexpensively. You're going to get a lot more shares of that 2020.
So cut the 47% in half?
Yes.
Because that's what I have, the 47%. So take half of that, put it in the 2020, but leave the 53% in the balanced asset. Or
correct.
Put half of that also.
No. So right now you have half in the 2015, right?
I have that. It's divided up. It's in the 2015 as a 47% short-term and a 53% balanced asset, and it is Roth. Okay.
So I would put all that's in the 2015 into the 2020. I'm just, to make it simple, I'm going to say that's 50% of your whole portfolio. Is that right?
Okay. do they allow, I know I don't have a penalty because I'm 59 and a half past. Do they allow me to take money out, like if I wanted to put $5,000 in the charitable gift annuity through you guys? Do I have to pay that back as a loan from them, or do I get to take that out?
No, you can take. I think you can take that out. Here's the problem. It's what that is an annuity. It's an annuity through principal. What you have, it's not a normal kind of fund. So the rules are going to be a little bit different. So though you may be able to, maybe you can withdraw it without that 10% penalty because you're 59 and a half, they may not allow any withdrawals without some surrender charge of some sort. Or the company, even at 59 and a half, does not have to allow a current employee that is continuing to contribute to move any of the money until after you're no longer working there. So you would have to ask that question if you're able to do that. Okay? If you are able to do it, you can't avoid, even though you're putting in a charitable gift annuity, that if you take the $5,000, you can't avoid paying the tax on it. So it's still going to be a taxable event to you because it's just going to be considered a normal withdrawal. So you'd have to pay tax on that $5,000 if you withdraw it. It's not like rolling it over into another IRA. It's actually considered, unfortunately, for charities, it's considered a withdrawal.
Account that I have, the 401k Roth, and I'm prepaying the taxes. I'll get taxed on it again.
Oh, I'm sorry. I forgot that it was a Roth. My mistake. No. If it's a Roth, no, you can just withdraw that and not have any trouble. But again, because it's an annuity, there's probably a whole different set of rules that apply to it.
Because we went to Wells Fargo. I wanted to open up an IRA Roth like you were suggesting.
Yes.
And put something in there, but they want $5,000 to open that up.
Oh, well, you can. Yeah, that's ridiculous. You can go somewhere else to do that. I mean, you can go to TD Ameritrade and do it for nothing. So, but, I wouldn't. I mean, if you wanted to do that, an IRA Roth, you can go to your bank or to TD, any of the brokers out there, TD Ameritrade, Schwab, E-Trade, Scottrade, one of those, and open it up. Won't cost you anything. So hopefully that helps you a little bit. A lot of questions in there, and it's a little bit too, it's hard on a Friday to try to get into it too deep. Let me go to Matthew in North Carolina. Hey, Matthew.
Yes, sir. I'm fairly new to all this, and I opened an investment account in TD Ameritrade, and I haven't invested any of it yet. I've just been putting money. You told me just to put money into it for a while, and I'm ready to put it into something, and I don't know whether I need to. Somehow, I think I may need to just put it into a Roth because I'm not going to mess with it I'm not planning on messing with it until, I'm 50 or 60, and I'm only 30. And I just wanted to know if I needed to move it into a Roth and what I needed to invest it in something that I'm not going to, like I say, I'm not going to look at it every day. It's just something easy.
Matthew,
that I put money into once or twice a year.
Right. What I would do, Matthew, is I would, tell TD Ameritrade, call them and say, I want to change that account to a Roth account, Roth IRA account. They might have to fill out a little bit more paperwork. I'm not sure, but you want to do that, put it in a Roth. Then I would look at, I would probably take a good, solid company, ExxonMobil, International Paper, or maybe another oil company like Marathon Oil or one of those, or Phillips 66, and make your first purchase of that of that stock, and then either do one or two things. I believe at your age, if you take any one of those companies that I just mentioned, and every year twice a year you put in some money to buy more of those shares, I think you're going to be fine. You're going to do really well by the time you retire. If you feel like, hey, I got too much in ExxonMobil, I got but so then for the next 2 years you pick another stock and you put it in that. I think if you take on that kind of strategy and you don't get caught up in trying to do something too overly aggressive, well, there's a new stock up here and everybody says it's going to go through the roof, and and you just stay on course. You have more money and you know what to do with when you retire.
Okay.
So that's what I would do. Thank you, Matthew. I know that's going to work out for you. Let me go to John in Virginia. Hey, John.
Hey, Dan. Thanks for taking my call.
Sure.
First, let me just say I'm a little embarrassed by this call.
Oh, no. Don't even think about it.
We're trying to get our finances in order.
Good.
So I've created a spreadsheet here with all our income and then our what's going out.
Yep.
And I can't account for about $20,000. At the end of the day, I don't know where all this money's going, and I was wondering if you had any opinion on these software programs for home budget or any sort of system.
I think one of the best inexpensive systems out there for budgeting is I would go to crown.org, and go to Crown Financial. And, man, they've got some great resources on good, solid budgeting. And, that was done years ago by Larry Burkett and has been modified by others in the ministry since. But great stuff. It's going to be inexpensive. And you're going to be able to come up with some great strategies. I told both my son-in-laws before they got married to make sure they do that very thing, and they did. But that's a great place to start. Look, all the software systems that are budgeting. Budgeting is all about what you put in, right? So if what the numbers are, so the software systems aren't going to be a whole lot different other than the spreadsheet's going to have some, neat kind of calculations that you might not do in a regular Excel spreadsheet. So, it's going to help you, but it's still always going to be a matter of what you're putting in and, for income and what you're putting in for expenses. So, I think there's plenty. You can go to Staples and buy a budgeting software program for $29, and it's basically an elaborate spreadsheet that's going to help you keep account of what you're doing, and that's very, very good. I'm not, I'm saying that, that's good stuff. You need to do that, but as far as some of the real basic ways to get a good listen, I know people, and you shouldn't be embarrassed by this, John. I know people that are 50 years old, 60 years old, and doing their first budget they've ever done in their life. They don't even know where to start. We go through our life, so many of us go through our life and just never even think about the budget. What we think about is, do I still have a little bit of money left in my checking account before the next pay? And, so I totally get that and understand it's not anything to be embarrassed about by any stretch of the imagination. What you ought to be is really excited that you've come to the conclusion that you need to get some budgeting done and feel really good about that. So I'm glad you've done that. But I would go to Crown first, take a look at even some of their resources and, go through some of that, because I think that's going to give you a world of help. They're good, solid biblical principles that, we can all use. So that's where I would start. And then whether you want to add to it a software program to make it easier, then do it. But that's where I would start.
Okay. All right. I'll do that.
All right, John. Good stuff, man. I'm glad you're thinking about it, and I wish you all the best on it. Let me go to Arthur from Louisiana. Hey, Arthur.
Hey, thank you for taking my call. And
sure.
I want to add my condolences to the other folks about your mother-in-law.
Oh, thank you.
And I wanted to ask one about one of the preferred stocks.
Mm-hmm.
I've got 4 that I've got, and one of them I found, it's not on your list you sent out last, and I found it somewhere in the old email.
Okay.
It's an insurance company.
Right.
And I was wondering if you had put out to sell that, or what was the deal on that?
No. I think that, that's still a good preferred. I haven't, the reason why I haven't continued to put it on my list of the three that I have reiterated a number of times, I've said, look, it's still a good time to buy, is because I think if I were putting money, I would tell you that if you're putting money in a preferred, I would rather the concentration be on the last three, because I think they're a better value right now and are less likely to be called, even though the insurance company is paying a higher dividend. But, I don't want anybody to just chase the higher dividend and, not think about the stability of it and having it, or maybe that it's even overpriced. So I would suggest to you, Arthur, that you stick to the other three. But if you wanted to buy some of that, if you already owned it and wanted to add to it, I wouldn't have a problem with it.
Well, I got into it for the dividend is coming up, and I just got to wondering maybe I should get out after the dividend. But if you say it's a good company, I'll stay in it.
Yeah. I mean, I think it's okay to stay in. Yeah, I wouldn't buy any more, but I would stay in. Yep.
Yeah, I appreciate that. I got another question, and I probably know the answer of it, but I got my IRA split up between Scottrade and my credit union.
Okay.
Now, and considering the asset allocation, I should consider both those monies, I guess I would say.
Yes, that's true.
That's what I thought. Thank you for what you do here.
All right, thank you. I sure appreciate it, Arthur. Yes, always, when I think of asset allocation, I wrote an article about asset allocation and how important it is today. It's coming out tonight in my newsletter. But, when I think of asset allocation and what you're doing with your money, what you're investing, I always think in terms, and I want you to think in terms like this as well, that it's one pot of money. Your wife's IRA, your savings account, your CD, your savings bonds, your checking account money, whatever. It's all one pot of money. So that when you do your diversification, if you treat everything as an account, and I'm diversifying my account, you're destined to get a lot of situations where you're overweighted, where you have too much. I got oil in every account I have. Well, you got too much then. So you treat it as one pot always. We're going to get right back to the phones after this break, 866-300-9298. 866-300-9298. Folks, there has never been a better time to be considering a charitable gift annuity right now. Never been a better time. You heard a call from somebody trying to get a charitable trust done right now before the end of the year. I don't even know where the foundation is as far as if they can handle, but you need to call them. I hope you'll do it and start thinking about that for your plan. Financial Issues, I'm Dan Celia. We're going to be right back after this and get right back to the phone. Hi, this is Dan Celia. It is difficult in these volatile times to think about how am I going to manage my money? Can I manage my money? Do I have to put my trust and faith in someone else and then expect them to be biblically responsible in their management strategies? I think all of you have had those questions and concerns. Well, I can put you at some ease and tell you that if you come alongside Financial Issues and partner with us for $85 a year, I will help you with all those things. We're going to give you stock picks every Monday. I'm going to put you on an alert system that'll tell you when to buy or sell or hold or give you comfort. You'll get asset allocation models, investment strategies. You'll have access to our conference call that we do every month with our partners, all for $85 a year. I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, Financial Issues. We're going to get back to phones, 866-300-9298. Let me go to Robert. Robert's calling us from Arkansas. Hey, Robert.
Hey, how you doing?
Good.
I'm 53 years old. I work for a major transportation company, but they have no match on the 401k.
Okay.
I'm at 9% on that. I've got $60,000 in the IRA.
Okay.
And owe $9,000 on my house at 7.8%. I've got $40,000 at 401k. I was wondering if I need to maybe just start putting that 401k money in the IRA or.
Well, here's the thing. You'd have more options if you were, since I assume it's an IRA that you can kind of control,
Right.
and put it in different things. And I kind of like that idea. You're not getting a match. You do get some benefit because you're saving on taxes out of your pay by doing that 9%. Because remember, the 9% comes off your pay, then they calculate your payroll tax on what's left. So you're paying less taxes because of that. And, we forget that there's always benefit, even though they're not matching, you still get that benefit of paying a little bit less taxes on your payroll. So what you will notice if you were to stop doing the 9% in your 401k and just putting it in your IRA, you're going to notice your payroll tax is going to go up. So a little bit. And you're not going to net back as much as you think you will once you stop that. So give that some thought. But yeah, I like the idea of using the IRA because, you have those options. And, that's important to be able to kind of utilize every option out there based on, what you might want to do. You might want to buy an energy stock and can't do it, obviously, in your 401k. But I would give that some thought. As far as your mortgage goes, I wouldn't want you to take any money out to pay it off if that's what you were thinking. If you're not over 59.5, I think I forget what you told me there.
53.
53. So I wouldn't want you to take that 10% penalty on that. I would probably just work hard to try to, continue to plug away at that. That'll be paid off before you retire, and that's all that's important. So I would say, do the IRA. Maybe what you do is cut it in half for a while. To, only do maybe 4% in your 401k and do the other 5% in your IRA, and get some more options doing that. And that might be a good plan.
On the IRA, the tax lady told me that since I do have a retirement plan, that I couldn't take that money off my taxes, what I put in it.
Yeah, because you can only use a certain deduction every year, and if your 9% that you're putting in is more than that deduction, then you can't use anymore. Obviously, since she told you that, it is more than that deduction. So that is true. You can't deduct it.
Okay.
All right.
You go with maybe 4% in a 401k and then 5% in the IRA.
Yeah, and I think that would be a good plan. Yeah.
Okay.
All right. Thanks, Robert. I appreciate the call. Let me go to David in Georgia.
Hey, Dave. Hey. Merry Christmas.
Thank you, David.
I had a couple of questions about a stock here that I bought a few months ago. Dan, KKR and KTOS. Want to get your opinion on those two stocks. And you may have already talked about this in the beginning of the program. I missed the first part.
Mm-hmm.
If you have, I apologize. But
No.
I was wondering if your opinion is Halliburton and Marathon, you think they're close to their bottom? I was looking to buy those.
Yeah, I think they are. I think Marathon definitely is real close. I think Halliburton was real close day before yesterday. They went up a little bit, but yeah, I think they're close. I think they're real close. I think they're as close as certainly close enough to be buying, in my opinion. So yeah, for sure. I'm not a fan of KKR and Company. I would probably, my opinion of it is that it is, they're a capital markets company. They're a company that is, I'm just going to make it simple, say they're in the financial sector of, the world of investing. So from that standpoint, I'm not big right now on any of the financials. I don't believe most of the reports of the financials. I think that they certainly can be in a place where we're going to see some downturn. This particular capital company, it does a lot of global investing and a lot of global investment management around the world. That's way too volatile right now for me, so that would be a good company probably not to own. KT, if you own KTOS, was it Kratos? Is that what you said?
Yes.
Yeah.
Kratos.
Yes.
And I should have. I was very undecided, but I did not add to them this past week when they were down, and I probably should have. I bought them at 5, and I know they dropped down to about 4.25.
Yeah, they did. They dropped down to 420. I like it. I mean, I if you were to add to it here, I would be okay with that. They get about 50% of their revenues from defense. They do armored vehicles and security solutions for military and defense, and not to mention armored vehicles for defense and so on and so forth. And look, so my opinion of the company, it is a very small company, but they're in a very good market that is growing and expanding, needs to grow and expand. It's not like it's growing and expanding just because there's an okay market for it. We really need to see some growth in both in the defense side of things, which we certainly will have, hopefully, under this new Congress. And if we get a different mentality and ideology as president, we're going to start to see that go up even more, and that's going to help companies like this. Obviously, which I don't want to see this, but if there were a war to break out and those kinds of things, again, this company is going to be helped by some of that. Now, having said all that, this is probably another company that is primed for a buyout to be able to sell to someone else. That still wouldn't be a bad thing if you owned it. The thing I don't like about the company is they don't pay any dividends. It's strictly a growth play. You're buying it because you're hoping, it's going to go up to, $15, $16 a share. So I like it. I wouldn't have a problem with you adding to it right now, but if I were going to add some money to something, it probably wouldn't be this company. Even if I were down a little bit, I think whatever you have, you ought to ride it out. If you have a little bit of money to add into the market, I would look at a couple of those other names you gave me.
Okay. All right. Thanks, Dan.
All right, David.
Merry Christmas again.
Thank you. Merry Christmas to you. Let me go to Merle. Merle's calling us from Texas. Hey, Merle.
Hi, Dan. How you doing?
Good.
Question is, I've got traditional IRAs, and I've had them for 20 years. And every year, this time of year, I start thinking about the Roth IRAs.
Mm-hmm.
I'm self-employed at a fairly high tax rate. And so whatever I do, whenever I think about it, it always comes to my mind to go ahead and have a traditional at a higher tax rate now, and then when I retire, I'll have a lower tax rate. But I'm just wondering, is that the right approach, or everybody?
Now, do you max out your IRA?
Yes, sir.
Have you thought about a SEP IRA?
We have, being a small business, that has definitely come up. And that, that's kind of the next approach.
Yeah. I mean, I think that you might want to think about, it's not going to cost you anything or, be an issue for you, but you might want to think about converting the one you have, to a SEP, so that you can get a little money into it, particularly as you get closer to retirement, and still use that for your deduction. So here's what I would say. If I wouldn't worry and think a whole lot about the future as far as you being in a lower tax rate. That's the old, that's what they sell traditional IRAs on. You're going to be in the theory being you're going to be in a lower tax bracket. and you're going to be paying taxes when you take the money at a lower rate. That may or may not be true. I believe it's not going to be true because it hasn't been true for so many people in the last 5 years. They retire, they take some work on the side, they're working part-time, tax rates go up, so their taxes are up anyway. So, it may or may not be true, but I would say this, if today, this year, it helps you save on the taxes that you're paying, if you're paying taxes every year, then I think it's worth doing it. I have a traditional SEP, as someone self-employed. I have it because of the tax benefit I get, that it saves me money every year when I do my taxes, because it's another deduction. So I appreciate that. I'm also planning someday that I'll start weaning out of that at some point in time and converting it to a Roth IRA. So I wouldn't be, I think if you're getting today a tax benefit today, I would continue to take that tax benefit as long as you can. And I think that'll make sense for you.
Okay.
All right.
Thank you very much.
All right, Merle. Thank you. Let me go to Laura. Laura's calling us from Kansas. Hey, Laura.
Hi, Dan. Hey, I've been working with you. I had a variable annuity, and you've been saying take the money out of there, and I was doing that. I took $7,000 out this summer, and it's a $30,000 annuity. So I went this month to try to take some more out, and they said, well, it's fully out of surrender. You can take all of it out. But then they said I can exercise it on September 22nd of 2016. So I thought it wouldn't mature until 2016. So do I want to still take all this money out now?
So
do I have anything left?
It depends on what they mean by exercising. I think they mean you can annuitize it for whatever the monthly income is that they're going to give you. Is that what they mean?
I don't know. I couldn't. It was a hard lady to understand, and she just kept repeating the same thing.
Yeah.
So she wasn't offering any help.
Yeah. How far are you from retirement?
About 15 years.
Yeah. I mean, I think that you ought to, if you can take that out now without any surrender charges or penalty, I would rather see you move that over into your own personal IRA that you have some control over, and you can do some different things with it, and that makes far more sense to me. Or maybe if you're at a job that has a 401k or something, maybe they'll let you roll it over to that. But I assume it's qualified money. It's IRA money.
Yes.
Yeah. So, yeah, I mean, I think it would make sense to roll it over into a different IRA.
Okay, just take it all out. And then I have nothing left in this, right?
That's correct. It'll close the account.
Benefits.
It's you're surrendering the contract, so there won't be any benefits. And the only other thing that you might want to check is to find out if it has a death benefit component to it. Do you know if it does?
Yes, it does.
So, and if that death benefit is of benefit to you, if that's something that you would like to have for your heirs, then you might need to rethink that a little bit and try to decide if it's worth keeping it in there so that you continue to, someone will receive that death benefit, or do you move in, and if you need life insurance, you get a term life insurance policy. But you're going to think about that a little bit before you just move it, to make sure that the death benefit is not something that you're kind of counting on.
Okay.
All
And then
right.
I have one more comment.
Sure.
Could you mention once in a while, it would be helpful if you tell us when you're broadcasting, because I listen only by podcast, and so I can't tell the time because my radio station has you like at 1 o'clock in the afternoon.
Oh, okay.
Here in Kansas.
Oh, well. See, now I wouldn't have ever thought to do that, but that's a great point. Yes, I will do that. And I'll ask Devin to remind me of that on occasion so that I tell. We're on every day. We're on every day at the same time. Of course, we're on every day from 9 to 11 Eastern time, and from 8 to 10, obviously, Central time. So we're on every day at the same time in the morning. So, but I will I will try to mention that. And if you go to afr.net during those times, you can hear it live at 8 to 10 Central Time, afr.net, and you can listen to the program live or watch it live. You've been listening to Financial Issues. Remember, folks, all that you have is His. We will stand before Him someday, and let's be found good and faithful stewards. Have a great day and a great day of worship on Sunday, a wonderful weekend. God bless.
If we ever forget that we're one nation under God, then we will be a nation gone under.